Today, clinging to the trade lifeline. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and problem news with a distinctively Australian flavour. The ABS released the latest trade figures today, and it showed that in June, Australia's trade surplus jumped to $8 billion, which is a new record high. And they also revised up the main number to $6.2 billion from $5.7 billion previously. Actually, within these numbers, we see that exports advanced while imports pulled back sharply. Exports increased by 1.4%, which was way above expectations, and this was driven by iron ore, which rose again thanks to the hike in the global prices following the Vale supply shock from Brazil. The iron ore price rose to around $107 per tonne in June, up from $100 previously, and metal ores, which includes iron ore, rose by almost 5%, up $0.55 billion. But imports dived, dropping by 3.6% or down $1.3 billion. And this is a reflection, I think, of weak demand across Australia, as we discussed yesterday. As well as volatility, civil aircraft imports eased back by around $0.3 billion, while there were lower global energy prices, and that gave a $0.4 billion drop, as well as weaker volumes. And core imports, which exclude things like fuel and aircraft and gold, declined by 2.4% in the month, which is down $0.75 billion. And if you look back over the June quarter, the trade surplus rose to $19.7 billion, which is $5.2 billion up on the March quarter. And as a result, it looks to me as though there will be a current account surplus for the June quarter, perhaps of around $500 million. Now, if that was the case, that will be the first current account surplus since the June quarter of 1975. And this, of course, would help to reduce the current deficit, which is standing at around $2.9 billion at the start of the quarter. And it's the same story, really, with export earnings rising 3.7% in the June quarter, whereas imports grew by only 0.5%. Thus, the terms of trade rose by a further 2% in the second quarter, and again, mainly thanks to iron ore. And over the past year, export earnings have surged up 15.5%, while the import bill has largely been flat, in fact down 1.3% June on June. In dollar terms, export earnings in June are $5.7 billion higher than a year earlier. And the biggest mover over this period is, guess what, metal ores, up $3.9 billion, while other resources are up by around $1.1 billion. And service exports also performed well over the past year, up by $0.69 billion, which is 7.7%. And now here comes the rub. Of course, it looks to me as though some of these commodity prices are now coming off, as we discussed yesterday in our post. And so the question then becomes, what will happen to trade momentum in the next quarter and the quarter after that, if indeed other exporters start shipping more to China and the exchange rate works against us? So whilst it is good news in one regard, we are still very reliant on exports, specifically of iron ore, and the implications, of course, if that goes the wrong way, are very significant. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.